Hello. Hello and welcome to the first webcast that we're going to be doing. This is just a test webcast. First of all, we're testing our new Yeti microphone. It's one of the best microphones that we can get. The camera we're using is a Logitech HD webcam. That's ideally that's not ideal. We're going to be upgrading by Monday, hopefully, if we can get the money for it. We have a cash flow problem in the real world, I guess you could say, but in our investments we're looking strong, and so that's what we're here to discuss. Really, we're discussed to talk about what's been happening in 2017 and our guidance going into 2017, with a little bit of comments about 2018 as well, although that's a bit too forward for my taste. So, as I mentioned earlier, my name is Johan Noaz, and I am the co-founder with Al Noaz. About a year ago in June, exactly a year, we founded this company with $5,000 and have not withdrawn money except one time to build a computer and one time to help my father with some taxes and other bills. Since founding the company, we have seen an astronomical increase. In fact, I've looked at all the top wealth management fund managers, and while they've outperformed the general market, and the general market has been on a bull run ever since the election, so they've been outperforming the bullish market, so they've been doing very bullish trading, and yet our risk is much less than theirs, and our reward is on par with them or exceeding them. How is this possible? Well, that brings us to our first investment, which is NVIDIA. Many of you know that the reason that we are in NVIDIA is because NVIDIA is a fist, and this fist has fingers: 1 finger, 2 finger, 3 fingers, 4 fingers, 5 fingers. It has 5 fingers, in fact many more than just 5. The point is, like a spider, NVIDIA has all the general risk of having one spider in your house, I guess, if you want to keep the analogy going. But if you wanted to invest in a bunch of spiders, if you wanted to invest in Facebook, Apple, Amazon, Microsoft, Google, Tesla, Toyota, which, by the way, NVIDIA is now the sole provider of that type of automotive technology to Toyota, Volvo, Volkswagen. The list is endless. They're really cornering the car market, and there was a very good article on that. I suggest you all take a look at that, how NVIDIA is cornering the car market. But so our primary investment, and then we'll go through the rest of our investments and how we feel about it right now. These are only investments that have at least 500,000 or more. However, the few first ones we'll mention have more than at least $1 million in them. About NVIDIA. So, going on with the reference, instead of buying 5 different companies, we have found one company that has a finger in all the companies that are rated above 9% on Thomas Equity summary scores, which is a summary of many different analysts: upgrade, downgrade, overweight, true weight, 5-star, 1-star, whatever it is. It's 9.6 or higher is our cutoff. We don't invest in companies that don't have the analysts backing. That isn't totally true. There are exceptions. KKR, for example, analysts have hated it ever since 2016, but they're wrong, because we started KKR at 11.11, and KKR is one of our biggest winners, hitting $20 intraday this year. And we plan to see it release record earnings on the 26th or 27th, which coincidentally is our price target on the stock, $26 to $27. Now, let's go ahead and talk about the rest of NVIDIA. NVIDIA is inside of all the blue chip stocks that you would want to personally possess in your portfolio. All the stocks that get all the news have extremely high risk and are extremely volatile. NVIDIA is by no means a non-volatile stock, but instead of owning several stocks that you know are volatile and have to wonder about product cycles and whether or not the products will do well in the market, NVIDIA builds the infrastructure for these products, whether it's a self-driving car, whether it's a calculator that they sell to students, whether it's a laptop computer, whether it's a MacBook or a Windows notebook. These companies use NVIDIA's software, whether it's an Xbox or a PlayStation, which in that case, we're looking at AMD and NVIDIA, both of which are in our portfolio. So regardless of these big names, the risk of owning those big names is mitigated, but the reward is still there because Nvidia is paid first, regardless of what happens to the underlying stocks. The only thing that matters is that Nvidia is paid first. Nvidia has the market depth, it has the market capitalization, the dry powder to make investments, and it is in all the best stocks and all the growing as well as emerging investments it's making have proven to be amazing stories. For example, Tesla. Whether Tesla achieves it or not, billions of dollars are being poured into Tesla, and Nvidia is getting that money to research and develop. Essentially, Nvidia is getting a free lunch, and they say that there is no such thing as free lunches, but we found one, and by God, we will eat it because it is a rare thing indeed. Moving on to our next biggest holding would be Netflix. Netflix had an amazing quarter. We attribute this very strongly to the fact that, let me make sure that we're recording real quick. Okay, we are. I attribute this strongly to the fact that Netflix in 2016 is taking advantage of falling Comcast and DirecTV subscriptions. I took a look at that information and saw, well, look, people aren't giving up their entertainment. They must be switching to things. YouTube is free and does have paid content, but there is something about YouTube that is a different flavor than traditional television. Even Netflix, even Hulu doesn't quite have that traditional television-like feel. While Netflix seems to bring together all of that sort of variety, as well as having options for HBO and Showtime that Hulu and other companies are struggling with in a seamless and integrated system, as well as a large platform of how to access it. You can access it from your phone, laptop, from anywhere really. People are watching TV, but not on their TV. And that is why Netflix added, I believe it was like 500,000 subscribers in just one quarter, which is an amazing amount of subscribers. To simply think about it, to get 500,000 new subscribers, they don't need to expand their current infrastructure. Their current servers and computing systems do not need to be upgraded to take on 500,000 subscribers. So they didn't pay any money to make the room. They didn't pay any money to make the capability to take on these subscribers. But trust me, they are taking the money from the subscribers at roughly $20 internationally average is the Netflix subscription. Now, Netflix has primarily been selling in the United States of America, but what increased its subscription so much is that they are now adding new languages, not just simply dubbing over American films, but finding actual production, producing, not just for getting the licenses of already made films, but they are creating Hollywoods in other countries run by Netflix. If Hollywood was a stock, wouldn't you want to have bought it back when they were making the first films? Unfortunately, it's not. But I think in the 21st century and moving forward, there will be stocks that represent almost all of media. Right now, in the dwindling TV service, Times Warner is basically what Netflix will be for the mobile and the cloud-based TV systems, and that is why we are a strong buy on both Nvidia and Netflix. Funny fact, Netflix uses Nvidia software to deliver to their end users. So all of our companies are more or less integrated, that they're all paying each other and they're all making money and they're all involved with other competitors, but in a non-cannibalistic way. Non-cannibalistic investments are a term that we came up for starting with Nvidia and AMD, which is the next stock that I'm going to discuss. Although we have taken significant portions of AMD off of our portfolio, especially our portfolio Alpha number 1, Alpha number 2, and Alpha 4, it's still the same in Alpha 3 and Charitable Fund 4. We still have the same number of AMD. But AMD, across the board, we've reduced it, and the reason for our reduction is because that it's starting to become cannibalistic. But for the most of time that we held these two stocks, they weren't cannibalistic. So what do we mean by cannibalism here? Well, it's all in the name. These two stocks used to never show up in the same product. Okay, so a MacBook has an AMD graphics processor, but there is no NVIDIA product in there. And then a PC might have an NVIDIA GPU, but there is no AMD product in there. Now that AMD and NVIDIA are planning on creating a competitor to Intel, because in these two examples, you would have the NVIDIA graphic GPU, but you would have an Intel CPU, or a AMD GPU and an Intel CPU, with no cannibalism. Now we have cannibalism because Intel is being pushed by AMD's new Ryzer CPU. So we now have for the first time a situation where a computer might be sold where both NVIDIA and AMD are fighting not just for the graphics processing unit, but for the computing processing unit as well, the central processing unit. Intel will certainly lose in the fight between NVIDIA and AMD. The problem is, after Intel is out of the way, AMD and NVIDIA no longer belong in the same portfolio. Given the chance to choose between these two companies, we choose NVIDIA. And the reason is cars. As we mentioned before, they have cornered the car market. And whether Tesla goes up or down, everyone thinks that Tesla is sink or swim for NVIDIA. The truth is that that is not true. Tesla is one of the smallest type. It is one of the biggest upside potentials, but it's by no means, a sure bet. A sure bet is in the unsexy names. Tesla may be very sexy sounding. It may sound like, a new thing. And it certainly is, and it has the potential to get there. But we have to remember Elon Musk, the CEO of Tesla, is the same person who wants us to be on Mars in 10 years. So while I peg Tesla's chances at being significantly higher than getting to Mars, this is a man who, when he says we're going to deliver 500,000 cars by the end of 2018, is the same man that said we're going to be on Mars by the end of 2020. And not just on Mars, but living in Mars, walking, getting our mail, going to Starbucks on Mars. So we have to think a little bit about his reasoning, and Tesla is not too comfortable. I don't own the stock, but wait, then again I do. How do I do it? Tesla is one of the fingers of NVIDIA. Almost all of Tesla's software and proprietary systems are not proprietary, they're proprietary to NVIDIA. Tesla uses them, NVIDIA gets paid, and the cars could sit in the car sales lot with no buyers, but NVIDIA has already out of the transaction. That concludes our semiconductors. The last tech stocks we're going to look at is KLAC. I can't actually pronounce the full name, so it's just KLAC. They are a semiconductor, memory, pretty much just information technology and tech stock. It's a manufacturing stock. It's very undervalued. It has a huge equity score. I think it's a 9.9 out of 10. I think the only reason it's not a 10 strong buy under all the analysts is just because if you say the number 10 out of 10, and then you get proven wrong, you look very foolish. But that's how serious they are about KLAC. KLAC is doing great. Also, it's a great stock because it's at exactly $100 right now. So for retail investors, if it goes up $1, that's 1%. It's right there at 100. It's very easy to calculate. If that's something that's important to you, I know it's important to my mom. It's very easy to see where your end price targets and where your growth could be. So that sums up KLAC. Moving on to KKR. KKR, wonderful business. We sold KKR in 1950 in order to make room to purchase Microsoft, which we discussed. Did we discuss it? Yes, we mentioned it earlier, but we'll go into it a little bit more because that is some big news. But we sold KKR at 1950, and sure enough, while we were investing in the proceeds of the KKR sale, we expected KKR to go down, and sure enough it did. KKR went down from 1950 all the way down to 1899, at which we swiftly repurchased it. So we got a 51-cent premium on the KKR trade while loosening up enough capital to invest in Microsoft and then doubling down in Microsoft by taking away stock from AMD. I think that was an excellent move on the part of our firm, and looking backwards, I don't think there was any way we could have played it better. That by the end of the week added that transaction alone, that combination of transactions alone ended with us essentially doubling our bottom line, at least with margin not net doubling it, but gross doubling our bottom line. Coming very close to net doubling our bottom line. We won't discuss actual figures in this specific video. This video, as I mentioned, is just for testing purposes, testing the software and hardware. Now, moving on to future events, we won't go through every stock. We own over 100 stocks, so if you do have a specific question about a stock, let me know. But just to go off the list of the stocks that we are currently bullish on, we are strong buy 5 out of 5 Microsoft, strong buy 5 out of 5 KKR, strong buy 4 out of 5 KLAC. We are buy, which is 3 out of 5. That sometimes people call that a hold, so we'll call it a hold buy, a 3.5 on AMD, with the intention to sell it off at around $16. If we can get 15 for it, that's fine. It's trading at 13.80 or something like that. Coming into Monday, we're looking, if Monday, for any reason, Microsoft is red, that is going to be a strong buy. We would give it 6 out of 5 stars if possible. Anytime Microsoft is red till the next month, till around August 15th, that is a buying opportunity, and we strongly believe in that. KKR is a buying opportunity. It's a lot more stable than these technology stocks. A big reason why KKR is so stable is because if you're familiar with the market, the 3 top indices of the market, in singular, they're referred to as the indexes, but it's the indices. The New York Stock Exchange index, the NASDAQ index, the Dow Jones Industrial Average Index, and the NASDAQ Composite 1100, and the S&P 500, and the various other indexes that people follow. For example, we've been following SOXX, which is an index of all the semiconductors, of which AMD, MU, and of course NVIDIA is one of their 3 top. They're 3 largest companies in that index. We saw a lot of selling on Friday of ETFs and of the indexes, which remarkably, considering the volume, held up Microsoft. Microsoft did not fall like the rest of the company, and that is all because of its earnings, which was amazing. I got to speak to the CFO of Microsoft, Amy Hood, wonderful woman. She gave a lot of great answers. She kind of skirted around mine, but with more research, I found out what the answer was and the reason why she wouldn't share it. However, that is insider information for Microsoft, and I should not be sharing that in a video. But since this is mainly going to my mother, it's alright. Just don't tell anyone, Mom. That's insider trading, because you're not a shareholder of Microsoft, unless you are. Anyway, so moving on from that, what about the company? What about YouTube? What about the website? We plan to launch either YouTube or the website, or both, within the next month. The first steps of YouTube was in getting the actual setup, and we just don't have the money for a higher quality camera. When we do get a higher quality camera, one that records, we have a good picture camera, but not a good high quality recording camera. We're using a webcam. We have an excellent microphone, which I think you'll agree with me picks up my voice very well, and it's omnidirectional. And we recently bought a partnered NVIDIA creation, but made by Nuance Corporation, called Dragon Dictation, at a 50% sale, which allows everything I'm saying at any time of day to power my computer, power my trades, to be written down as a note. I can even speak directly to my broker, place calls, do whatever I want, and do it over the microphone. Once we eventually do get a better computer, once we do get a better YouTube camera, we will probably incorporate this weaker camera, as a behind view or a side view, and use the main camera alongside this. And our plan is to roll out not only a fully finished website. We're not going to create an under construction website at 6 to 7 million in capital. We should be able to afford a completely professional website done by professionals, with no under construction, keep waiting to be announced, nothing like that. When the website goes on, it will be completely done. And to let you know, we are 75% done with the website. The cost to us was around $2,000, which sounds fine. And we hope that website will be powered by the excellent cloud services that Microsoft Azure offers, and if they do not offer it to us for free through the grant, we will most likely be an Azure customer. We need Microsoft solutions such as Microsoft 365 professional version, as well as some other software that we need to buy, and I'll be discussing that with hopefully one of our future directors and shareholders, my mother. We're going to be discussing that. As for the microphone is not limited simply to YouTube, but it will allow us to do podcasts. And just so you know, I've been writing my blog and also writing my book and speaking directly to investors and making my own silly videos and just having a blast, just occupying my time and developing my voice and trying to create a professional and strong and charismatic persona when speaking to clients. And I think that daily practice with this microphone, daily reports, sending them to you first and then to other subscriptions, I think that is the right way to go, especially for my voice. In the end, we already have 5 other people that will be sending in their video recordings. The only thing is we need to all be using the same software. So that's going to be further down in a few months when everyone has one of these microphones, when we choose the right camera and everyone has the camera. There's going to be multiple people's videos taken in different locations. Then we're going to edit it together on the computer as if we're sitting next to each other and put it online as sort of like CNBC Money News or Mad Money by Jim Cramner. And the idea behind that is to entice someone to invest with us by providing hindsight 2020 but certified statements from Fidelity showing that yes, we really did make these predictions, we made these trades. We're going to in videos say, go ahead, place a hypothetical trade. Most traders have an option for someone to place a hypothetical trade without risking any real dollars. And we are going to have a station on YouTube, a series of YouTube videos called the $500 Challenge, where we will give $500 as a gift, as just a cash reward to whoever follows our subscriptions and manages to double their own $500 to $1,000 by following our trading strategies. So in order to sign on to this contest, and I think it will bring a lot of people in because that gives them a chance to make double their 500 investment and then get a reward. Only one person can win, but there will be lots of winners of their own self-made money. And if you have 500 in the stock account, you should follow along and see our stock tips and trade our stock tips. Essentially, to earn the trust of the YouTube viewers, we're going to tell people what to do, when to do it all day long, just like I told you when to buy Microsoft, and had you done it, it would have been a very good thing for you. Still not too late. Just like the advice that I would give to my father right next door, I would give advice directly to people who are subscribed to YouTube, and more detailed advice if they increase the relationship to the services we provide through our company. That's essentially the idea on the YouTube project. There are many more ways we want to go, but I'm not going to make a huge video. I do have something to do, but this is a video just to show you. And in fact, you're texting me right now, so we're going to go ahead and end this. And I hope you enjoyed it. I hope my voice is okay to you. It sounds good to me. And I hope that you can help me get some of the other tools that I need for both my academics and my professional career, which is really taking off, Mom. It is really doing very well. All right. Goodbye.